Uh, Good morning, good afternoon, wherever you are from the world. Good evening. Welcome to another video by the Market Maker SA. I hope you are doing good. I hope you are trading strong in this fine Tuesday that we have on my side. Today we're back at it with another video. Before we continue, don't forget to like, comment, and subscribe. Hit that notification bell icon so in case we drop again, you'll be notified first. So yeah, just hit it there and let's begin. Uh, Today we'll be looking at market structure. So we'll be looking at market structure, more specifically market structure in the lower time frames. Now, market structure is a key important element of price, as it can help you to identify where the trend is going, and where the bias of the market it's gonna go and where it's going to stop. That's very key and important there. Market structure is very important. As you can see here on the right, we have this market structure checklist that we're gonna use today. So that will help us to identify and make our trading much easier. But before getting to it, what is the typical market structure of the market? Well, as we know, the typical market structure of the market, as you can see, it starts with an anchor formation there, or in this case would be a peak formation low. Then we get a lower high, we get a higher high, followed by a higher low, followed by a higher low. Now, obviously, how are higher highs created? Higher highs are created at every break of structure. That's very important. After a key structure breaker has been formed in the market, that's when we get a higher high. That's very important. That's where we get a high high or a high low. And then obviously market has to come back and gives us market has to come back and give us a higher low. So in this instance, we have a higher low. Then once market has broken that structure, we have another higher high, and then market comes back down for a higher low, and then we have another higher high. Market took out the structure right here, and then we have another higher low, and obviously we wait for market to take out that structure. Then we have another higher high, then market comes back for the higher low, then obviously now we wait for market to take out that area again. So then we have another higher high. You see that one was quite a big one, but we have another higher high, and obviously after that higher high we expect a higher low. So market does this consecutively. That's how market moves in the trend. That's how they always move. That's how it moves in the fundamentals. That's how it's taught in the fundamentals as well. You can see that we have another higher low, then we have a high high. And obviously or in our instance, after 3 levels of rise or drop, we have what we call a big formation high. So that's our first leg. Second leg, usually our big formation high is our M formation, typical M formation. And then obviously, excuse me for that, let me put it on silent. Okay, let me just Yushi. Okay, sorry for that mistake. Sorry for the inconvenience, but yeah, gives us that peak formation high, gives us that M formation. And then obviously it starts dropping. We have our obviously it starts with our higher high. And obviously once this structure has been broken, that becomes our new higher low. Then we get a new higher high. Then obviously we wait for structure to break what? Wait for structure to break this higher, to break this structure down here. And if it breaks that structure, we get a higher low. And obviously after it breaks that structure, we have another higher high, a lower high. Then wait for market to break that structure down there to give us our lower low. And then we have, you see, our higher high again, our lower high again, and obviously we have our lower low. and that's how market basically runs it the whole time, up and down, up and down. It's consecutive because that's what they do. So very important. They're very crucial. And yeah, let me just I can't really remove or drawing, so it's fine. We'll leave it there. So yeah, that's how our market structure is basically perceived in the fundamentals of forex, as we know. So how do we then apply this to our chart, and how does it help us? How does it make our trading much easier? Well, it's very simple, and we're about to break it down right now. Just remember, don't forget to hit that notification bell icon. Don't forget to subscribe, as we're trying to hit a certain target by the end of the year. So very important there. And yeah, we could really use the support. So we're gonna start right here from this peak formation low. As you can see right here, this peak formation low right now we're in the H1. So when I drop down to M15, I want to focus specifically on the lower time frames today, and we're gonna break them down no matter how difficult it gets, but we're gonna do it. We're gonna do it. Let me just fix it up right there. Okay. And then if we drop down to our M15, okay, let's just go to where I marked it out there. There it is. And then be keen on our level count. So as you can see right here, obviously if you know your bank moves very well, we'll know that this starts with a job base rally. Very nice stuff there. Obviously then that becomes a new demand zone right there, as market came back to it, especially after this manipulation, accumulation, manipulation, and distribution away. That was very nice stuff there. I like what I see. Then obviously then structure wise, this structure was then broken. Structure like this were broken, confirming that being a high. And obviously now we're waiting for the higher low back there. So that became our, let me just mark it down there. That became our high. And obviously right there, that was our break of structure right there. We'll call it our BOS, break of structure, confirming that that's a high. And obviously after a higher low, we expect after a high we expect a higher low. So obviously market gave us that high low in a very nice way. Came back, they gave us that liquidity sweep, so very nice stuff there. We knew exactly what market wanted to do then. Then market obviously came back, rested. Market had to find a resting point, of course, as always. And market came back to this fair value gap right here. It came back to fair value gap, and you can see market went away very nicely. Now obviously when market went away very nicely, market broke significant structures as it was going to that direction. It broke significant structures, so that being our break of structure right there. Very nice stuff. And as you can see, then market made that our confirming high. We just mark it out there. Market gave us that as our confirming high, and then obviously after that we expect our higher low. As you can see, we got our higher low. Well, it was very tough, but we could also say that we got a moment that high have, and we got our high low right back here. Then we got a mini we got a mini break of structure right there, as you can see. Then we got another high. Let me just clone that. Ooh, okay. There. We got another high after a break of structure, and our high low came back right here on this base area. So that was very nice stuff there. Very nice stuff there. Yeah, came back to that base area. Down candle order block, very nice stuff. Then obviously market broke that structure again. Market broke that structure there, obviously making that our break of structure. So obviously after a high we expect another higher low. You see market came back to it right there. Market came back to it right there. And obviously market continued this trend over and over again. Like they're gonna do this over and over again, because this is how the market moves. And they're not gonna change it because it works for them, and it confuses a lot of people, because at the end of the day they're making their monies. So how do we then use that time frame to help us in this type of situation? Well, I was planning on using this time frame obviously as a way to use market structure to then pinpoint an area where you can then obviously enter in the market. So let's just go to the present time there. I just wanted to show you how the market works, and yeah. Let me just move it right. Let me just move it closer. Okay. So as you can see, we're gonna start with obvious structure. Obvious right now in present time we have this peak formation high, first leg, second leg, M formation, something that I like very much. And obviously after here we have our change of our break of structure. Our break of structure right here, our first significant break of structure, confirming that as a change of character. Obviously, change of character means that market is about to change the character which it was going at. So it means at this moment it's about to go into a down phase, or it's about to go short. In this instance, obviously, it broke that structure, so that structure confirmed broken, so we know where the direction is going. Now we're looking for our mitigation. As you can see, the only significant mitigation block that we can see right here is right here. Right here, very, very nice stuff. So immediately we can then identify that we're looking for our points of interest in this area. So that means right now at the current moment, it's kind of gonna be, it's not gonna be tough, but it's gonna take a while before market comes back there. Then obviously on number 3 we are looking for our bank move. You can see the only bank move that we can see right here is this one right here, this gap right here. Remember, gaps are listed as points of interest if you study your ITC very well. So that gap there is then used as our supply zone. So very, very nice that we identified our break of structure. I mean, we've identified our bank move. Obviously we'll use it as a rally-based rally, as a drop-based drop, but it's our supply zone. It's where we're looking for market to swing, the point of interest where we're looking for market to turn the market around. So then after we start looking at the momentum away from that area, you know, but momentum away from that area is very, very important, as it will then help you to identify how market is going to react when it comes to that area. How is it going to go away? And as you can see, when it was leaving with extreme velocity away, as you can see. So that's very, very nice stuff. And then it continued to be choppy a bit going down, but yes, it continues to chop down a bit going down. Then it continues to chop. So overall, I'm not thrilled with the way it ran away, but at the same time I don't mind it. So now we start looking at the time at our levels. You can see the time that market spent away there, as you can see, was basically nothing, because we're trying to fill the gap. So very, very important there. It's very, very nice. And obviously markets usually fill gaps 99% of the time, because they have to fill the gaps in the market. It's the same as that's an imbalance fill. They have to come and fill that imbalance, and they're gonna use it, and they're gonna fill it in the way of a swing point. So that's very, very important there. So then now we're at this present time right here. Obviously now we're in a retracement move, because right now we're trying to get market to come back into that area. So we're in a retracement move, but then obviously we still want ways there are ways that we can still capitalize this retracement of the market back into that area. There's still ways where we can make our money. So you can see right now market gave us this anchor point here. Very, very nice stuff. Those who see it, they see it. It's kind of a half Batman. As you can see, it's a half a Batman. Very, very nice stuff there. So you can see what market did. Market went away. Obviously the first step on our checklist is our structure. Market went away, taking out that structure there, that being our BOS break of structure. Let me just mark it down there, BOS break of structure. Obviously then that being after our break of structure, we start looking for a higher high, which in this instance, since we're going long, start looking for a higher high, and we find it right there. Higher high, obviously after the higher high, then we expected a higher low. So very, very nice stuff there. We found our higher low right there. Very, very nice stuff. So if I identify the structure, and if I identify that market has to break this structure as well, so it can create a new higher high. That's very, very key there. We already found a target. So now what we look for mitigation. As you can see now we look for points of interest from our break of structure going down. You can see market is already reacting at a specific area. So that we start looking for our bank move. Now, obviously we need to first identify if we're in a premium or if we're in a discount zone. As you can see right now, we are almost we are slightly in the discount zone. You can see just below the 50. So that's very, very nice stuff there. And now we start looking for a point of interest inside that mitigation block. As you can see right now, we're dropping to the M5. And what do we see? What do we see? We see market has taken out this area right here, confirming that as a liquidity sweep. So very, very nice stuff there. I like what I see. It means that people that were buying, people that were long here got taken out, or currently they got into margin trouble. Very, very nice stuff there. Things I like. And you can see right here, we already find our first point of interest being that base rally there. It's not that significant, but if we go down, let's go up to our higher time frames so we can identify if there's something more clearer that we can understand there. Okay, not really stuff that I like. I don't like this because I'm not really identifying anything on the left. It's very, very important that you can't just do what you do. You have to know what you're actually doing. Something that I need to identify on the left so I can be very sure of this trade. Okay, well, I already see something on the H1. I already see that inverted fair value gap right there. That's beautiful stuff. That's one part of the confluence. Because I'm not necessarily trading in the dark, otherwise that would be considered gambling. And as you can see right there, well, we had market come and fill that imbalance area. So that's very, very nice there as well. So I feel like as for now, we're just gonna use that yeah, okay. So we're gonna use that inverted fair value gap that we identified on the H1 as points of interest that will help us drive price. I mean, it's the confluence nonetheless. It's not really the strongest one, but it's one that I will take. So as you can see right now, currently at the moment, we've identified that we're in an inverted fair value gap, especially after that liquidity drop. Because if you actually think about it, that's the only probable point of interest that we can identify in that mitigation. So now we've identified the points of interest that's gonna help push price to our direction. Now we start looking for entries. As you can see, we've already identified that market has to come and take out that higher high. And look in there in the minis, we have a little break of structures down there, and then we have right here this down candle order block. This is beautiful stuff. That down candle order block is exactly the type of things I wanna see. And you see from that market structure going down, that's the area that we need to identify our points of interest. So we've already found a point of interest right there. So now we start looking for our entries. As we see right now, we have our first leg. Market came back for that second leg. Beautiful, beautiful stuff. And you know, we're not really that late. As you can see, the type of money that we can make from this area to this area is still a lot. So yeah, you can take your trade right there. Beautiful stuff. Like very, very nice stuff. Take yourself, buy right there, and you win money. I mean, let me see if I can try doing it right now. No, but I have to use paper trading. So, but very nice trade there. I don't mind it at all. Very nice trade. And obviously, I mean, it depends on what you really, really want. You know, it depends on what you really, really want. If you really, really want to think about it in a smart and reliable way, your take profit will be obviously in a risk management way. Your take profit will be right there. Beautiful stuff, right there. The moment where price goes and hits that high, that'll be a take profit. And see $83 on the US 30. Very, very nice stuff. 83, probably be risking just below that fair value gap there, $35. Decent money. Obviously, you don't decent money and decent risk. So yeah, very, very nice stuff there. Very, very nice stuff there. I do not mind it at all. I mean, it's a live execution, if you say. But obviously, I'm just gonna wait for it to go into green, then we'll move on to the next, or we'll come back and we look at it at the end of the video. I don't mind that. Oh, okay, we're already in green already. Well, that's blended. So then obviously from there on out, you can start we can start breaking even right there. Let me just put it specifically on 0, because okay, let's just put it right there. There you go. Splendid stuff with broken even, and yeah, very nice stuff. So I like what I see there. I like what I see there. And if you see, our take profit is right there on top there, where we're looking for market to take out that area. So very interesting stuff there. So obviously now we're gonna come back to it, but obviously let's look at the US30. Let's see what US30 is doing. As you can see, market is already rising up there. Let's look at what US30 is doing. And look at the probably look at gold, and we'll see how we can attack it from there. Let me just take that just take that I'm gonna take that what's this, where is it? I'm gonna take that that checklist, you know, just so I don't have to write it again. You see right now, we're $5 profit. It's going up, because that's the only way it can go, because you know it's following the pattern, and it's following Confluence very nicely. Where did I, oh, there it is. Let me just copy it right there. Okay, let's go to the US30. So obviously now we're the US30. Let's see what the Dow Jones 30 is doing. Probably gonna look part of the same-ish, but we'll see. Okay, this is one that I've already marked out. So okay, now let's look at gold. Because I don't wanna touch the ones that I've already looked at. So let's look at gold. Then we'll look at Bitcoin, then we'll be fine. So as you can see right now, we have gold right here. And a bit of a mini it's in a mini, what's the word am I looking for? Mini short, if you may say. Oh. I think it's taking a bit of its time to load, but I hope you are enjoying this video. You know, like I said, market structure is very important in the market, because it's a way that it will help you a lot. It will help you to understand how price is moving, and yeah, like gonna be doing the most, definitely. So let me just allow it there, and we'll continue. Yeah, okay, let's get into it. So we're looking at gold right now at the moment, and I like what it's doing. I like how it is, especially on the H1. Very nice stuff. Obviously right now we're focusing on the smaller time frames. So what we have right now in the smaller time frame, let me just move closer. We have our, let me just, okay, so what we've identified right now, we've identified key break-off structures, because right now we have right there, beautiful stuff, another break-off structure there, but more importantly, our mitigation block. So we've identified our key break-off structures, obviously that being our first lower high, then we have our lower low, then obviously we have our lower high, then we have our lower low, so forth and so forth. So we've identified our our structure. Number two, we start looking at our mitigation. As you can see right now, our mitigation, we've indicated a point of interest right there. Beautiful stuff between obviously between the lower high, the first lower high, and the first break of structure, the first imported break of structure. So that's our mitigation block. So number 3, now we start looking at our bank moves. And obviously now if we dissecting this, especially on the H5, bank move rise, let me just move it more closely. Okay, bank move wise, we have obviously break of structures, mini break of structures, but mini mitigation blocks that are important. As you can see right now, we already have our first job based drop, our job based drop. Obviously market came back to that area. Could have been an area where you have traded, but obviously not to hold for long, because market would have came back and eaten you. We had another mitigation block right there. And I mean, we had another mitigation block right there. Beautiful, beautiful stuff. And see, market came there. Market came to it, then ran away. Beautiful stuff right there. Beautiful stuff right there. Market came to it right there on that job base drop. Market came back to it and ran away. It's very, very nice stuff right there. Stuff that I like. The problem now about this base area is there was no mitigation block to back it up. You see what I'm trying to say? There was no mitigation block to back it up. This was just supposed to be out of your pure. This was just going to be pure price without a lot of things backing it up. I mean, you could have counted that as your break of structure, but I don't like it. But anyways, it's fine. We had that break of structure, obviously. Usually those trades are those type of trades that market will usually be gunning to take out a lot of people, because number one, if you look at a premium and discount wise, it's not in your discount, it's not in your premium zone. That's one thing that I didn't like about it. It's too cheap to sell, so it's taking the risk to sell there is not really that worth it ish. See, but otherwise, with furthermore break-up structures, furthermore lower highs, lower lows, and market finally came back, and obviously came back to this gigantic supply zone, same supply zone that if you look at your M15, it'll make sense. But that was a gigantic lower low, and then market had to come back and retest back to that base area that we see right there on our M15, because obviously from there it's a very simple drop, base drop. Market had never came back to it, came back to that up candle order block, and market dropped splendidly. Obviously right there as well, confirming our break of structures right there, confirming that being our lower high, and obviously this down here being our lower low. So now obviously we're in our present time right now, and we're on the daily, we're on the gold, we're on the M15. Obviously now for us to start looking at trade, I would like market to come back into this type of area right here, into my mitigation block. But if it doesn't, I really don't mind it, because the level count, especially the level count, has not been completed that much. If you think about it, that could still be counted as a consolidation. Market could then straight away from that area, which seems very likely, because there's not a lot of points of interest, because I mean imbalance wise they're all closed, and then waiting for market to come back to this area is a bit dicey, as obviously market is trying to fill orders and it's trying to take out structures. So I see market from here just straight making a huge straight away going down, but with how we're looking at everything else, we might expect it to come back up there. Obviously that would be splendid for accumulation, manipulation, and distribution down. But if it doesn't, obviously, it comes back to that up candle order block, that would be nice. But if it doesn't and it just straight away is from that area, I also wouldn't mind it. But it's not something that I don't think we'll be looking to trade unless it does what it's supposed to do, which is retrace back up and drop. Because I like the momentum away from it, it's very nice, but I'm not convinced. I'm not seeing enough to make me convinced and risk my money. So yeah, we're gonna blow it away. Okay, let's look at Bitcoin. Let's look at Bitcoin, then we'll close it off. So obviously Bitcoin, I usually don't look at Bitcoin a lot, but it's not really a problem. You can see right now we had that peak formation high, and we had that rally base drop supply zone, and that supply zone has been market chop for a long time there until it finally dropped. And I liked how it dropped from that area, breaking these significant structures on the H1. Very beautiful stuff right there. Stuff that we need and we need to see. Stuff that we need to see. Stuff that's necessary for us to see. Okay, let's jump to IM15. No, let's look at it this one from our H1 now, because don't mind the H1. So we've identified our structures, breakup structures. We identified this being our lower high, this being our lower low, and then obviously now we're waiting for our lower high. And obviously the only place right now where I can see a point of interest is right here, because obviously right now it's in our mitigation block, it's in our point of interest right now. See, it's our point of interest in our mitigation block, and the best place I see it right now is right there in that fair value gap. Because if you look right, if you go to our higher time frames, that uptrend order block is not made sure, hey, might not even be there. See, it's too small. So I see this being our main point of interest. As you see right now, it's also backed by a breaker block. Very nice stuff. It's backed by a breaker block. Now, what's a breaker block? A breaker block is a previous order block that wasn't respected, but then we use it as a flip zone to then trade the opposite direction. So there's a interesting trade here. I like what I see. Very nicely, and could go down for further drops. Don't mind it going down. Especially after the breakup structures confirm the change of character. Yeah, don't mind it. Sell there. Could be an interesting trade. That one I might look at it probably the next day. So yeah, that one will be interesting, definitely. Well, yeah. So yeah, guys, I see it's already in profit. Stuff that I like very much. Obviously, for a take profit, I'll probably be looking at it for somewhere there. So yeah, very nice stuff. I don't mind that at all. So yeah, guys, thank you all for tuning in. Don't forget to like, comment, subscribe. Don't forget to hit that notification bell icon, as we're trying to get to a specific goal. But otherwise, thank you for joining. Happy trading. Trade strong, guys. The market is looking very good these days, so it could be a great opportunity for yours to go in. But yeah, thank you all for watching, and goodbye.